that working?
Yeah. How you been,
All right.
man?
Cool. Good. How are you? Congrats on
Good.
landing another client this morning.
Thank you. I appreciate it. Yeah.
So let's talk about what we were talking about earlier this morning about how, some people are able to accumulate a lot of like properties and business assets, even in a small town. And, sometimes like looking at it, you think in like in a small town, like, hey, is this legitimate or is this not legitimate? And I think it is legitimate. And there's two different things going on, both that involve a lot of hard work. And so definitely not taking away like any hard work or
Right.
ingenuity from people, because this isn't to say that this is just like easy things to do. But with the real estate accumulation and the business accumulation are two separate but very similar topics. And I think both of which warrant like a little bit of discussion.
Yeah.
So when you talk about people that are accumulating like a lot of small, kind of like lower end cash flowing rental properties in a specific spot, you're really looking at what big property management syndicators doing and pulling it down to like a smaller level, more tangible level. So like on a traditional real estate syndication, you'll have like a 1090 split or something similar to that, where somebody is attracting money, usually from accredited investors or at least qualified investors. They're investing it in a new development, and then they're taking their 10% ownership from the work that they're putting in. So the sweat equity is what gets that syndicator like his equity split, right? So some of my friends who do this with apartment complexes, they'll bring a portion of the money themselves, they'll bring in outside money, and then they'll buy a D-class apartment building, fix it up a little bit, raise rents, do better management practices. And then once the rents are raised, the property is now valued significantly higher. They can refinance it. They can pay out all their investors, keep their equity share, right, and continues cash flowing. Or the new now Class C apartment complex, something that an institutional investor may be interested in now, because while the institutional investor wasn't interested in the Class D apartment complex, now that you have better quality tenants, higher rents, now an institutional investor will be interested in it, which makes it worth a whole lot more money. They resell it, everybody gets paid out, themselves included. So, but when you're talking about like smaller deals, you may not necessarily have enough meat in the deal for accredited investors to be interested in it. But you can do similar things by setting up smaller LLCs with a few people that are putting in much smaller contributions. You can now buy those rental properties, especially if you're getting them at a discount. Make whatever repairs you need, get qualified tenants in it so they're a little better shape, and then you can refinance those properties and cash out that investment, or continue paying some kind of dividend to your co-owners in the space. So the whole thing revolves around like the basic premise that like the key to wealth is unencumbered cash flow exceeds debt servicing, right? So I've heard that, probably heard that before, but like that's all wealth building is income exceeds debt. So the more cash flow you can have on a larger leverage piece, the more flow is going to be available and the more equity is going to build up over time. And so it's the idea being, when you're doing a syndication, whether it be in real estate or in business deals, that you want a piece of a bigger pie rather than like the whole pie of a small pie to yourself. Right. The basic premise. Yeah. So that's like the real estate piece. If you look at the business piece, you can read about like the history of leverage buyouts going back to like the 50s, where equity groups come in, they contribute their own equity, a small piece of their own equity, borrow against the existing business, get mezzanine debt above the existing business cost, purchase the existing business, restructure it, make it more profitable, and then pay out all the investors. Okay. The idea being that debt service is cheaper than equity buildup. Yeah. Because you're making payments rather than a huge chunk. So that the equity is more expensive than debt. So by acquiring the business with debt, you're able to operate it more cheaply, pay everybody out and run the business. So obviously it's not a private equity company or a hedge fund in a small town, but you can use those same concepts. And this is where like the internet's huge, and why you start to see a lot of smaller people like you and I being able to have access to deals like this. Because whereas like in a huge real estate deal, maybe there was a lot of overhead that, you know, you would need a pretty established company to do that kind of stuff. Well, now your entire bookkeeping is done by QuickBooks. Like all your banking can be done online, all your property management infrastructure is automated, you know, so it doesn't take in this like a huge company to do a lot of these small real estate deals. And I think the same thing with businesses, whereas in like a leverage buyout shop or a private equity fund had a lot of really sophisticated people that would go in, and now a corporate takeover would have to be a pretty large business for it to be worth it. Well, you can see that with a local business like a liquor store or a laundromat. Like you can do the same thing on a local level now, because the efficiency, I would imagine, I haven't bought any like existing traditional businesses, but I would imagine you find a traditional business where people are working themselves to death.
Right.
You could very easily buy it, offer them a salary to keep running it, streamline things so it's way easier, way more efficient. And now all of a sudden you are building, you now have control of that business. You have the cash flows. And so the big thing, we'll go back to LBOs. The big philosophy behind the LBO when you're buying a big company, like think big hedge funds buying big companies, is you want something that has steady cash flows. Doesn't have to be huge cash flows, but they need to be steady cash flows and low fixed expenses. And so when you think of things like a laundromat, that's exactly what it is, right? Like, or a
car wash,
clean car wash. Yeah. Car wash probably have pretty, if you got a loan on the property, it could be it. But anyhow, the idea being you're obligated to those fixed expenses no matter what. But if you have steady cash flows, you can very easily predict the debt you're able to service. If you know for a fact there's $6,000 a month coming in, you know that the fixed expenses are $1,000 a month. You can very realistically service several $1,000s a month in debt, knowing that you're covered. So now you can take on that debt, and you can maintain those cash flows while you're servicing the debt, and that business becomes more profitable. And you can use that to pay out your investors, and now you own the business.
Yeah.
So I think that's why I say, like, when you ask the question like, hey, is this legitimate that someone would control, this many properties, this many businesses in a small town? Yeah, it's very legitimate. And you can see how that's a lot of hard work that goes into that, because you not only have to attract the capital, you have to find the deals so you can get the deals undervalued. You have to attract the capital so you can put the capital together. And then you have to keep that whole train on the tracks throughout the life of the debt servicing. So, that's the complexity of
worth it overall.
I mean, it depends on your goals, clearly for someone who's doing it and is continuing to scale up, that's what they like doing. I do like finding things that are undervalued. I don't necessarily, it's not appealing to me to think of like capital attraction and like investor relationships. That's not super attractive to me. I do like the idea of turning businesses around though. Especially small businesses. That would be a lot of fun.
That's my goal, was to just do that full time.
Okay. And so I think where you add a lot of value, if you wanted to get into something like that with someone who's been doing it for, well over a decade, it looks like pretty successfully, you got to think about what their problems are, what problems they're trying to solve, right? So a problem that both he and I have is finding distressed assets, right? Whether it be real estate or businesses. So how do you help someone find those distressed assets? And you have a unique skill set where you can create media that's going to help attract with those attraction efforts, right? Hey, are you struggling to sell your house? Like, do you want to get out of your house? Do you need a cash solution for your house? Or on the business side, are you tired? Like, has your small business turned into something that you're a slave to?
Right.
Your small business holding you down. Would you like to be able to take vacation? Like, even though you've been running your small business have you been running a small business in this town for 10 years and never taken a vacation, you'd like to do that, like talk to us and fix that, right?
Yeah.
And so how do you run those attraction efforts to find those distressed assets, whether they're businesses or houses? And then on the flip side, like how do you get the investor attraction, which really isn't that difficult, honestly. If you have legitimate deals, there's always people that want to invest in it. And then just keeping those trains on the tracks as they're going. So,
Gotcha.
which that's a job. So that's like an employee attraction effort more than anything else, because you need people. Like I have a property manager full time that's running, my properties. Like you need people to keep that train on the tracks. There's a large training piece to that. So helping people design training would be like, a good way to get involved. So there's several different value adds where you could get involved and like see what exactly people are doing and help them out with it.
It's an interesting concept. I like it. Yeah, I know we were talking earlier about it. And it's funny actually, after we were talking, whenever I asked you that question, I ended up seeing the same person we were thinking about just not too long after that.
Oh yeah, cool.
Yep, I saw him driving down the street. So
nice.
So that was kind of funny. I thought of you right whenever I saw that. That's when I was heading back from lunch. I was like, huh.
Nice.
So, but yeah, it sounds good. I mean, how's everything else? I mean,
good.
Yeah.
Yeah.
Is it easier to do that with residential or office spaces? Commercial or residential?
I think with residential, because that's where you're going to find the most undervalued things.
Okay.
Because office spaces, you got to think about the way things are sold. Office spaces are already sold on, and most commercial properties already sold on a relational basis. So when you think about it, it's a very small fraction of commercial properties that are actually listed for sale.
Okay.
Just by virtue of listing a commercial property for sale devalues it significantly.
So I think what I think I'm kind of seeing is before the virus happened, WeWork was at the top and then they fell, right?
Mm-hmm.
They were just spending way too much more money than they had. So they even made a docu-series about it called like the rise and fall of WeWork or something like that. Mm-hmm. So now what I'm seeing is I'm seeing a lot of big businesses just not going back into their offices because they realize that they can save tremendous amounts of money every year by their employees working from home. So I see a lot of companies just saying, oh no, we're just going to keep working from home, especially in the major cities, like some of the people I work with in some of the metro hubs, I see that a lot. So I think there's going to be a overwhelming amount of buildings, big buildings that are just completely empty after this whole virus and everything. But I was wondering on that behalf, because kind of what I'm doing at the Commons, would it be worth it for someone to do that, but get one of these big buildings, start leasing it out or buy it, and then start breaking it up and subleasing little offices? Because, the individuals that are used to going to the office don't want to work from home because their kids are there, their spouse is there, whatever it is. So they're willing to pay a couple $100s a month out of pocket to have a place to go to. So do you think that's going to be something that happens? Do you think that's something that some of these people are going to do on the commercial level instead of the residential level?
Yeah, I think that's a good point, because the biggest thing is like, what value are you adding, right? And
right.
Can you get compensated for the value add that you're bringing? I agree that commercial real estate is probably going to see some kind of correction coming out of this. I do also agree with the premise that there's going to be a lot more remote work over time. So then you have a couple questions you have to ask yourself. One, is remote work actually going to increase in the place where your commercial space is available?
Right.
So you have to say, is the commercial space actually going to come at a discount? If that ends up being true, which, some places that are already like lower property values don't see as much of a correction as places where the property values are necessarily higher.
New York down like four times the average right now.
Yeah. So I'm sure like, most big cities, I'm out in Phoenix right now, and there's like just empty, brand new built, like commercial all around where I'm staying right now.
Yeah.
So one, does the price correct significantly where you're at relative to the amount of people that are actually like co-working? So if the co-working is bringing in increased income, which is the one thing you could see, is places that are relatively low income could see a pretty substantial increase in income through co-working jobs becoming available. And so if that holds true, then yes, people are going to have the discretionary income where they're going to want to look for space where they can co-work from.
Yeah.
And so you really have to look for demand signals, like what kind of job creation. And there's a lot of statistics that are available from the state and from the Chamber of Commerce and other like state level sources. Like, what kind of job growth are you actually seeing? Because if that demand signal looks strong for that kind of job growth, then it would probably, it could very well be worth it.
Yeah. Yeah, I can see that. Oh, well, yeah, I think that kind of answers the questions I had. Can you think of anything else?
I think the one question I have for you is like, where would you see yourself now, seeing like the problems that a syndicator faces, and with the media company that you have, where would you see something like EMM coming in and being able to solve a lot of those problems?
For me, right off the bat, I think funnels. I think, creating certain funnels to be able to find the undervalued properties, to find people that are needing to liquidate some of their stuff, things like that, for a real estate investor or property investor of some sort, or even matching up someone that's willing to put in the sweat equity and the hard work with a developer or investor of some sort.
Oh, that's a good idea. One of my big problems is always finding like people that actually want to work. And you have to think about, like, in a town like Joplin, Missouri, with the coronavirus unemployment money, like that's actually more money than a lot of people made, prior to the unemployment checks coming out.
Oh yeah.
So then finding people willing to work now, once that stimulus money goes away, we'll see what happens. But finding people to work, like when you're looking for people to work, is something that's like, a perpetual challenge. So one thing that I've done is like running, timely Facebook ads, with a contact form has been super successful. But having kind of a perpetual funnel that's looking for people to either work or sell their homes, that would be real helpful.
Yeah, and just take it straight to like a landing page.
Mm-hmm.
Yeah, 100%. That or even like an email nurturing campaign of some sort. I think that would be really, really good as well. But yeah, I know those are a couple of the ideas that we're doing just recently for a couple of people. So it's kind of right on the top of my mind as of the last couple of weeks. Are two of those big things that I've been doing proposals for or actually implementing. So it is nice. Yeah. It would simplify your process a lot. And I think that's what really just helps people, is making everything as simple as possible. Mm-hmm. Less time it takes, the more conversion rate you're going to have.
Mm-hmm.
So
if I were you, what I would really think about doing is talking to him and offering to build a funnel to attract distressed business owners.
Yep.
And charge him specifically. I would charge him specifically for like your true costs, but with an equity split in any businesses that ended up actually closing through your funnel. That's what I would do, 100%. Because I would build those funnels. You could maintain those funnels yourself.
Yeah.
And so you would there'd be like total transparency, so there's zero chance of any kind of like bad feelings happening.
Oh, yeah.
You'd be maintaining the funnel, so it would be transparent to you which ones actually close. And then just negotiating, pre-negotiating an equity split on anything that actually closes through those funnels.
Yeah. Sorry, I got a notification going off. Yeah, I definitely agree. As you said that, I just did a quick little Google search and found the website that the individual has. And it looks like they're actually lacking on that aspect of things. So might be a good approach to take.
Yeah. So I know he's got a very good, so it looks like he's involved in some like social media or small business entrepreneur like masterminds, because you can look at the engagement, like it's a really good engagement on all of his social media, and a lot of them seem to be a lot of smaller entrepreneurs, kind of like a lot of wannabe entrepreneurs, things like that. But it's people that are truly engaged, and I think that's one thing that is hard to get, is you have to have a good network, and he's reached all over the country to get a good network, and you have to find people that are willing to like dig in on a daily basis, and he's definitely found that, and that's a big deal, like in rural America, to get a network of people that are actually engaged. So even though some of them may be kind of aspiring entrepreneurs, they do seem at least very engaged, which helps everybody. And so I think there's probably kind of an underground, like the concept of wholesaling houses, right? Where someone goes out, finds a distressed house, sells it to an investor. I think there's a large network of people doing that with businesses as well, but it's probably pretty labor intensive, where they're cold calling, they're finding the distressed business, and then taking some kind of proceeds when they sell the distressed business to someone like him. But if you could do that with a funnel, you could essentially do the same thing, but automate it.
100%. Yeah, and I actually have I'll share some other info with you here in a little bit that I found out on that one. So
okay, cool. All right, sweet. Well, thanks. I appreciate it.
Yeah, man, I appreciate it.